Welcome back to Nasdaq Trade Talks. My name is Leanne Alfaro. I'm a producer and host here at Nasdaq. It's Friday, just past 2 o'clock, and you know that what that means? It means it's time for the mid-weekly wrap-up. Joining me right now is the Market Intelligence Desk Managing Director, Chris Dearborn. Thank you so much for joining us.
Thanks for letting me be here, Leanne. I appreciate it.
Well,
and happy St. Patrick's Day, almost.
Almost. We have them ringing the closing bell, so the parade happening in New York this weekend.
Parade committee will be here this afternoon, so it's going to be a great fun. Make sure you watch the closing bell tonight on Nasdaq website.
Clearly got the memo with the green tie right there.
Of course.
So let's talk headlines this week. There's been a lot of geopolitical ones influencing the market for sure. So go ahead and give us the rundown.
Sure. So the markets are having one heck of a week. It's definitely a risk-on environment. Markets across the board, in contrast to the previous week, where we have 5 up days this week, we saw 5 straight down days last week. And this week what we're looking at is the market breaking out to higher highs. The S&P is up nearly 3.2%. The Dow Jones, which is a little bit of a laggard because of the horrible Boeing situation, which happened with the poor aircraft crash, and our hearts go out to those folks and family, is only up 1.8%. Remember, Dow Jones Industrial is a price-based index as opposed to the S&P or the Nasdaq Composite, which is market cap weighted index. And Boeing, with a $380 price target, is the highest ranking member of the Dow Jones Industrial by weight within the index. So where Boeing goes, the Dow Jones Industrial goes. The Nasdaq Composite, great week this week, up over 4%, and you're seeing small caps even better than that. So it's been one heck of a week risk on. A number of different items kind of posting that, and like you said, the macro environment is definitely where we are right now. We've had some positive comments the last couple of days, especially reinforced earlier this morning, that the U.S. and China are on firmer footing with trade talks. They want to try to get that done at some point, but again, as Trump says, he's looking for a deal that is good for America, not just good for politics. So we're looking forward to something special happening there. Markets seem to be reacting to that positive news, and with that, you have a risk-on environment where stocks are making higher highs almost every day on good volume. And
we have the ongoing news coming from Brexit. It's been quite a tug and pull there.
Absolutely. You know, that's been a drag because there's uncertainty. Investors do not like uncertainty. And that's been a drag not only on the currency, but also on the European markets. Until that situation gets resolved, and we're not really sure which way it's going to be resolved, I don't think anybody does, investors are going to kind of stay away from that. And that's why you're seeing money flows into the U.S., into U.S. equities, and also U.S. commodities as well. Gold is breaking out to all-time 52-week highs. Oil is basing at the top of its range. We'll have a nice chart on oil in a few minutes. And what you're looking at is U.S. equities across the board, not just the large cap names, but small cap, mid cap, and large, all rallying here, looking to make higher highs, and we're trading at the highest point of the year.
And now we have a couple of recurring events coming up. We have the QuadWatch expiration date. It happens 4 times a year. We also have the S&P index rebalance, so both of those happening now.
They happen concurrently. It's the 3rd Friday of the 3rd month of each quarter. QuadWatch has futures, single stock futures, single stock options, index futures, and index options, all expiring on the same day, which give added volume to the opening and the close. So if you're watching stocks and you're wondering why we had such large opening crosses this morning at 9:30, or why we're going to have such large closing crosses at 4 o'clock, and we are going to have large crosses at 4 o'clock. It's all related to the expiration of the options to futures. And with that, the S&P will rebalance all of its indexes, as well as a number of other indice providers, because of the high liquidity at the close today.
Let's go ahead and kick it to the charts here. And start with the S&P index right over on your side.
So the first chart that we're looking at here is a one-year chart of the S&P 500. We've been talking about that a lot recently. We've been bringing it up on Trade Talks here, and my colleague Brian Joyce, who's a CMT, drew up a very nice chart here and showing higher highs in the S&P. Again, what you're looking at is a 52-week chart. And what you have here is the S&P has been topping out here against resistance at the 2815 level. That 2815, 2816 level has been earmarked for months. And after the market bottomed here and you had the V bottom up, we tested it not once, not twice, but 3 times. And this week we finally broken out. So we're now trading up significantly higher in the S&P 500, and we're looking to move on to the higher highs. So what does that mean? The S&P is looking to retest. Our target here is on this move over the next, we'll give what a period of time, I can't give an exact date here, is that we're looking for a uptick to about 2890, and then from there off the old highs above 2900. Again, risk on environment, this should happen. And let me just add to that. as a contrarian indicator, the VIX, which we didn't talk about before, is trading with a 12 handle, and it's down over 50% year to date. That's a tremendous move down for the VIX, which is the fear indicator, which is telling that people are not buying risk. They're buying risk and they're not hedging it, which means that they want to be involved. People are afraid they're going to miss this market. And they have had a significant run since Christmas Eve lows.
Right.
And with that, people are starting to fear that they are going to miss out on future returns. So you should see more piling in to the equities, and the S&P is one of those indexes that you want to keep your eye on.
Absolutely. And then moving right over, we have
This is a great chart.
oil.
Absolutely. So what you're looking at here is the price of a barrel of oil over the course of a year. And for those of you who drive out there, you might have noticed over the last couple of weeks that the price of oil, price of gas at the pump has increased. And why is that? You're looking at higher prices for barrels of oil. Even though it's starting to pull back a little bit today, and we're down a little bit today, if you look at this channel again with the V bottom coming up here and basing up, what you're looking at is a Fibonacci retracement of 38.2%, which means that you have significant technical support for the product, and we're basing out here. This chart's a couple of days old, and we've broken out above that 58 level, and with that, you're looking for higher highs to push to $62, which is the 200-day moving average.
All right. Well, thank you, Chris, for giving
Absolutely.
us the weekly update from the Market Intelligence Desk, and we'll see you here next week. In the meantime, happy St. Patrick's Day.
Shalante.
Nasdaq followers, thank you so much for joining us on another episode of Trade Talks. Please stay tuned. We'll have more coverage coming to you from the closing bell. See you then.